$36 billion. That is what New York wants from Kalshi, a betting market valued at $40 billion, and the federal government just stepped in on the side of the betting market. Today, 4 crypto stories, 3 macro, 3 AI, and at the end, the $36 billion fight over who actually referees a market, New York or Washington. Crypto's biggest fight today is not about a coin, it is about jurisdiction. 1. New York sued Kalshi as an illegal gambling operation, with exposure above $36 billion. The CFTC answered with an emergency order forcing Kalshi to keep operating in New York anyway. Then the city opened a marketing probe that also names Polymarket, Coinbase, and Gemini. Kalshi, meanwhile, is raising money at a reported $40 billion valuation. A federal agency is using emergency powers to protect a private market from a state. Whoever wins this writes the rulebook for every exchange that runs a prediction market. 2. Bitcoin has opened lower every day this week, sitting around $63,000, down 47% from a year ago. Every trend window is now negative, daily, weekly, monthly, yearly, and the volume behind the price is disappearing. July spot volume fell to $429 billion, down more than a fifth in 1 month. Price is the boat. Volume is the water under it. A tight range on thin water means less selling pressure and less cushion the day a real order lands. 3. In November, spot XRP ETFs pulled in $650 million in a month. This August, $1 million. That is a 99.8% collapse in new money. The funds still hold about 1.5% of the supply and trade over $700 million a day. Compare Bitcoin's ETFs, which hold over 6% of that coin. The lesson is 9 months old and now measurable. The wrapper makes buying easy. It does not make anyone want the asset. 4. Robinhood's own blockchain just set a record, 11.6 million transactions in a day. Value locked on the chain jumped a third in a week to $473 million. One stablecoin on it grew from 17 million to 253 million in 30 days. A retail broker turned its customers' order flow into its own settlement layer. The users stay, the fees stay, and the chain's growth is really the broker's balance sheet, compounding. Bitcoin at 63 with every trend window negative. Spot volume down a fifth in a month. And the hottest asset in crypto is not a coin. It is a license to run a market. That's crypto today. The official numbers say calm. The measured numbers keep disagreeing. Start with the tape. 1. Wholesale prices went nowhere in July. Flat, against expectations of a rise. Core came in at 0.2. Traders trimmed their bets on a September hike, and the S&P 500 closed above 7,800 for the first time ever, at 7,801. The Warsh Fed has been debating a hike, not a cut. But look underneath. Jobless claims rose for a third straight week to 209,000. The market is pricing the doves winning, while the labor data quietly softens. Both of those cannot stay true forever. 2. The Energy Secretary says oil is moving through the Strait of Hormuz again, almost 9 million barrels a day. The tanker trackers cannot find it. Kepler counted 6 vessel transits on Monday, down from 11 a day the week before, and its analysts said the two numbers cannot be reconciled. Even the government's own energy agency raised its estimate of shut-in production. Oil fell anyway, Brent to 87, WTI near 82. The market is trading the official number. The measured number says supply is tighter. One of them sets next month's inflation print. 3. Applied Materials sells the machines that make the chips. It just posted a record quarter, $9.1 billion in revenue, up 25%, and guided next quarter above $10 billion. The CEO called AI demand unprecedented and raised the full-year outlook. China fell to 28% of revenue from 35%. This is what makes the AI boom hard to dismiss. 2 layers upstream from the chatbots. At the equipment layer, the build-out is not a forecast. It is booked revenue, and it is still accelerating. Wholesale inflation flat. The S&P above 7,800 for the first time, and the chip bellwether just guided up again. Retail sales hits at 8:30 this morning. That's macro today. The real cost of frontier AI is about to become public information. 1. OpenAI's public filing, the S1, is expected on the SEC's Edgar system within weeks, targeting a September listing. The numbers circulating ahead of it, and all of this is reported, not confirmed. Around $2 billion a month in revenue, a projected $14 billion loss this year, and valuation talk near $852 billion. Microsoft's revenue share is still unpublished. Here is why it matters. The public market is about to see frontier AI's real cost structure for the first time. Every private AI valuation gets marked against that document. 2. Cerebras builds dinner plate-sized chips to compete with NVIDIA. As a private company, that story raised billions. As a public company, it just reported a quarterly loss, and the stock dropped around 13%. The detail that matters: cloud revenue quadrupled, but gross profit fell 20%. Selling AI compute below NVIDIA's price buys growth and pays for it out of margin. Public investors just showed where that trade stops working. The growth line and the margin line crossed, and the market picked the margin line. 3. Meta released Muse Glimmer, a 30 billion parameter AI agent that runs on your own machine. License, Apache 2.0. Free, including for commercial use. Meta sells ads, not model subscriptions, so it can price its rival's core product at zero. Every capable free model raises the bar a paid API has to clear to justify its bill. The squeeze lands exactly on the margins that AI companies are about to sell to public investors. Free is a strategy, and it is aimed. The biggest AI lab is about to open its books to the public. The first pure play challenger just posted a loss, and the free local model keeps getting better. The bill for the build-out is coming due in public. That's AI today. New York and Washington are fighting over a betting market, and the loser hands over either $36 billion or the power to police gambling inside its own borders. Kalshi is a federally licensed exchange where people trade on real-world outcomes, elections, sports, economic data. New York calls that gambling. Kalshi calls it a derivatives market regulated in Washington by the CFTC. That single word choice, gambling or derivatives, is the entire business model. Gambling is licensed state by state. Derivatives answer to one federal agency. The timeline. May of this year, Kalshi raises money at a $22 billion valuation. By July, annualized revenue passes $4 billion, roughly doubling in 2 months. The World Cup alone processed $27 billion in trades. July 31st, New York's Attorney General sues, calling Kalshi an unlicensed gambling operation with exposure the CFTC puts above $36 billion. August 11th, the CFTC fires back with an emergency order, a power normally reserved for market disruptions, directing Kalshi to keep serving New York while the case is fought. Its chair said, quote, "New York has no business regulating these interstate financial markets." August 12th. New York City opens a deceptive marketing probe that names Kalshi, Polymarket, Coinbase, and Gemini. And through all of it, Kalshi keeps raising at a reported $40 billion. Now the money and the power. Who decides? For the moment, a federal commission, pointing emergency authority at a state government. Who pays? If New York wins, Kalshi's investors do. They are buying in at $40 billion against a $36 billion legal exposure. That is not a footnote risk. That is most of the company. If Washington wins, the states pay, all 50 of them, because the power to tax and police betting inside their own borders quietly moves to one agency in DC. And watch who else is in the room. Coinbase and Gemini are named in the city probe. Every crypto exchange building prediction markets is watching whether one federal license really overrides 50 state legislatures. The emergency order does not settle any of that. It only decides who gets to keep operating while the courts argue. But that is the game itself. In a fight between regulators, the side that keeps the market open collects revenue every day. The argument continues. A $40 billion company, a $36 billion lawsuit, and one question underneath: when the referee picks a side, who is refereeing the referee? Hold that thought. So here is the question I keep turning over. When a federal regulator and the company it regulates are on the same side of a courtroom, who is actually protecting you? The referee with the emergency powers, or the state with the lawsuit? I genuinely want your read on this one. Tell me in the comments. Blue pill, the system worked. Inflation is cooling, stocks set records, and a federal referee protected an innovative market from an overreaching state. Red pill, every check got overruled by whoever held the bigger lever this week, a state by an agency. The Fed's hike talk by a record tape. Tanker data by an official podium. $36 billion says this gets decided in court, not in the comments. But start in the comments. The timeline keeps moving. We will see you in the next one.